Good morning and welcome to TA for Traders. It's Thursday the 16th of March. I'm Nigel Croft. In this video we'll be looking at 5 UK stocks. On Prudential we're expecting to see a further consolidation. Morrisons, we're seeing it bouncing into resistance. Sports Direct, where we know other people are saying you should buy, we actually believe you should wait for a break. There's no indication from the chart as yet which way the break will be. We've had the recovery from last week's results and it's bounced back into the trading range. Wait for a break either up or down. Sainsbury's has come out with figures today. The shares came off initially, found support at the 50-day moving average. And on Asos, the online retailer, they're breaking to the upside and looking like blue skies from here. On the Prudential, you can see that it has moved quite significantly to the upside over the last 4 days. However, it has gone overbought, with the RSI now at 75.56 and actually at a level that it hasn't gone higher from all year. So that is it showing us that it's overbought and some consolidation should be expected. MACD is positive. One should expect a consolidation at this level. Looking at the longer term, you can see that we're actually at the highs that were achieved in March, in fact a year ago, March last year. That is now resistance, and we've hit the upper Bollinger Band, so really some consolidation will be expected to let the moving averages catch up. Again, the RSI is overbought on the weekly at 71.43. On the support resistance levels, there's that one bit of resistance at 1761.5, with the support at the 20-day 1647.5 and 1622. Morrisons, the shares came off last week on the figures and it's now bouncing, but it's bouncing into resistance. You can see that the 20-day, the yellow line, is now rolled down, and that we're getting up towards the 50-day as well. 50-day still moving up, but it is starting to roll. The MACD is showing negative momentum, as is the RSI. The RSI has bounced slightly with the bounce we've seen this week, but the resistance from the 20 days the key here, and at the moment one would expect that to hold. On the longer term picture, you can see that we've actually come back to the support on the figures last week of the 20-week moving average, and that is holding the market at the moment. Concern here is that the RSI has broken down and the MACD has also broken to the downside. So there's warnings coming through on the weekly that this support might not hold. So be aware of that. On the support resistance levels, we've got the resistance of that 20-day moving average, 242.71, and then at 249.92. with the support at 229.1 and then at 212.7. So the vulnerability is to the downside. You can see there's big gaps on the resistance levels there, which can be seen here, that because of the move up, we've got the supports at the lows from last week, and then really there's no support until we get down to this level. On Sports Direct, this is the daily picture, and you can see that the shares have recovered from the weekly, just gone back into the range, and you could draw a triangulation, or elongated triangulation pattern here. Let's focus on the shorter term picture, and you can see here that we bounced below. The blue line is the 50-day. We bounced below there last week and then managed to get back above. Now we're these are all moving averages. These the yellow is the 20-day. That, as you can see, that's tracking down, with the spot having gone above there this morning and now gone below. We've got the 50-day, the blue one, where we're slightly below as well, and then the down tracking 200-day. So the negative influences are coming from the 200-day and the 20-day, with the positive support coming from the 50-day. Going back out to show the full weekly, and let's look at the weekly, and you can see this consolidation. You can see that we're now tracking on the 20-week moving average, and it's the 50-week giving the downside pressure. 200-week is miles away, so don't worry about that. At the moment, on this triangulation pattern, you can't see which way it's going to break. The RSI is virtually neutral, going flat, as is the MACD. When it breaks in either direction, and you get a confirmation of the break, this share will move quite aggressively in that direction. Which direction it is at the moment, you cannot tell, so really you should sit on your hands and just wait. On the support resistance levels, that's resistance at the 200-day, 297.81, then at 301.47, with support at 272.97. Sainsbury's has come out with figures today, which was slightly disappointing. The shares came off initially to the 50-day moving average and have now found support. If it can stay above the 20-day today, I mean, that is seen as a positive sign technically. The RSI on the rally over the last week has ticked back above the 50 and has actually broken its downtrend, indicative of upside momentum, and the MACD have just started to roll up as well. So it would be good if it can hold above the 50-day. Looking at the weekly, and you can see really we're midway in a range trade, with the resistance at 294 and supports at around the 212.5. Mid-range, not really giving any indication which direction. Given the daily, one would maybe expect it to move up towards the 200-week moving average at 288.73, which will be the upper boundary of the trading range before pulling back down. On the support resistance levels, there's a resistance at 274.4, then at 275.1, with support at the 50-day, which, as we saw, held first thing this morning, 263.57, then 259.3. Finally, moving on to one of the shares that I've liked for a long time, and that's Asos, the internet retailer. You can see that I've drawn this trend channel on the shares. I actually drew it maybe around this time back in December, as I was worried that it might be breaking the trend. As you can see, the 50-day and the 20-day gave the support needed. We're now getting the trampoline effect off the 20-day and moving up. Really, one would expect to move up towards the upper boundary of the channel, which I'm just trying to move the chart and failing. It would be around the £60 level, 6,000. On the weekly, you can't see the trend channel here, but it does look good with the break that we're seeing this week. Really, the all-time highs on this share were just above the 7,000 level. One would expect, given that the upside momentum from the RSI and the MACD are about to turn around, that we will see further progress towards that level. On the support resistance levels, that one slight resistance at 71.95, 20-day giving support at 54.92, and the second support at 54.63. This has been TA for Traders, looking at the UK stocks on the 16th of March. Thank you very much for watching. Please do read the disclaimer that's coming on the screen at the end. I'll be back tomorrow with another video. Thank you very much.